Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead for the 2nd to the 6th of July 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So today we'll be having a look at the metals and also oil as we go into next week. On Friday we had the last trading day of June and also the last trading day of the quarter. So of course, as we go into next week, as we move into July, we're moving into the third quarter. Two big news items that you want to have in your trading calendar next week is going to be Wednesday's FOMC minutes. The minutes of the FOMC statement are released 3 weeks after the statement itself, and that can have a big impact certainly on the dollar and also on the metals. So expect big moves potentially on gold, silver and platinum on Wednesday after 7 o'clock London time. Also next Friday we have the non-farm payroll data as well, which of course can be a big catalyst for major moves and opportunities in the markets too. Typically over the second quarter of the year, so from April, May through to June, this tends to be the weakest time of year for the metals, in particular gold prices. And you can see very clearly over the last 5 years, 15 years and 30 years, normally you see this positive price action start to form as we go into July, following through to August, and September can be very strong months for the metals. So where we're poised at the moment with gold prices as we move into July, we have actually seen a bit of a bounce here into the close on Friday. The US dollar has rolled over again from the 95 zone. We've started to see it pull back and give some support into the close for gold, for silver, platinum and also palladium as well. Now we do have a few major news items next week, so you want to position yourself correctly for those. The FOMC minutes on Wednesday could be quite a big catalyst for a big move here later on in the session, and of course Friday's non-farm payroll too could also be a big mover. Just bear in mind though, this seasonal pattern, it's nothing new what we're seeing at the moment with gold, with its breakdown and where we're poised at the moment, near enough for the 6-month lows. This is very typical for gold to bottom out over June and July, and then it often provides a really good buying opportunity if you know what you're doing and if you know how to manage your risk to reward on these trades. You want to wait for confirmation before entering into those positions, but certainly on the metals right now, they're very oversold. They're right at the lower end of major channels, and if they do start to get a bid from a longer term point of view, if you're building core positions, these prices at the moment are very cheap relative to where the price was certainly earlier on in the year as well. So let's move over to the gold chart. We'll have a look at the price structure as we go into next week. So on both Thursday and Friday, gold broke through 1,250 US dollars per ounce, broke down to 1,245, but got supported, and certainly into the close on Friday, you can see where we've got a reversal here. We've got a positive close on the day, ever so slightly up on the day, finding support at 1,250 US dollars per ounce. Now, the big question going into next week is whether this will follow through and whether we're going to see a V-shaped reversal recovery here and start to see gold get a bid just above 1,250 US dollars per ounce, in which case, if this is the low at this point, it does offer a good risk reward for a buy opportunity if there is additional confirmation going into next week. So it is at a level where we could get a bounce. We're right at the lower end of the Keltner channels as well, and we're finding support at 1,250 US dollars per ounce. Now, it's not enough just to look at gold here. We're also interested in the correlations too. So for example, silver on Friday up 0.6% on the day, broke back above Thursday's high. It's holding on at the moment to $16 after breaking through support earlier on in the week, but we have seen a reversal. The US dollar unable to close above the 95 zone, and it's dropped fairly significantly into the close on Friday. We have another sell signal which has been generated. The dollar has tried a number of times to break and close above the 95 level, unsuccessfully doing so, and we want to see going into next week if this is going to start building up momentum to the downside. It is at a bit of a decision point here because it could just be coming right into support that gets bid going into next week, and we see a retracement higher and another potential retest of the 95 level if the dollar gets a bid. The more times that the US dollar comes up and retests the 95 zone, the more likely it is to break eventually, because it's just getting too many tests of that zone. We need to see how the price structure develops going into next week, the first week of July, and see how the dollar responds to the FOMC minutes and also Friday's non-farm payroll too. I would also point to some other correlations here as well. Palladium, we've actually got a buy signal into the close on Friday. We've been finding support over the last 2 or 3 days here. We capitulated on Tuesday, and then we are basing at the moment on palladium. Again, it needs a little bit more work to confirm a buy here with a break back above the weekly highs. But you can see here on palladium, we've got a fairly significant rejection candle, which is developed on the weekly chart. If palladium next week breaks above Friday's highs and clears above the weekly highs here, there is quite a lot of scope for upside here on palladium. From a risk to reward point of view, it's quite lucrative for a move back towards 1,000 to 1,025 US dollars per ounce for palladium. Platinum as well, again, developed a reversal into the close on Friday. Platinum is sitting right at the lower end of the Keltner channels, the monthly pivot as well. Platinum has been vulnerable over the last week. We've broken back down towards 2.5-year lows, but into the close, it's holding around 850 US dollars per ounce. Platinum is also very oversold and can be a very fast mover once it starts to get a bid. So I'm watching the metals very closely as we go into next week. On gold, by the way, if we were to see the price structure roll over next week, so let's say it doesn't get supported at this zone, which is around 1250 at the moment, and we were to see a breakdown in price here, if it does roll over and if it breaks below 1250, it is vulnerable to a retest back towards the swing lows here from December. So that would be residing at approximately 1,230 US dollars. That would be the next target if gold was to break down below Friday's lows and we see another wave of selling lower. Of course, if we were to take out that level of support at 1,235 US dollars, the next major level resides at 1,200 US dollars. From a seasonal point of view, gold last year bottomed out at the end of June. It then broke out at the beginning of July, and it had an incredible run all the way from $1,200 up to $1,350. So I would definitely be watching the precious metals going into next week. We have the beginnings of a reversal, but it needs a bit more confirmation. Metals right now, including platinum, silver and gold, they are all very oversold as we go into July. Now, moving over to crude oil, it has been an incredible run up since the OPEC meeting last Friday. So oil prices are now up 10% over the month of June. It's interesting too to note the overall positioning here from hedge funds and money managers. They've now raised their net longs on crude oil in the latest week. So we can see that data very clearly here. If we have a look at the overall net long positions, we saw a significant increase over the last week after the OPEC meeting. And if we have a look at the price structure here on oil, we've now broken out of the neckline. We've broken out to 3.5-year highs here on WTI crude oil. If you go back to last week's week ahead commodity report, we discussed the trade opportunity here on crude oil. And if you missed the breakout on WTI crude oil, have a look at Brent crude oil. In fact, on the open on Monday, Brent crude oil gapped down over 150 points on the open, giving a great opportunity to buy back at a much better entry price before this significant surge to the upside, where Brent crude oil has surged over 400 points over the last week here, and Brent crude oil has risen over 4.5% from Monday to Friday last week. So it's been another great opportunity here to capitalize on a breakout from an OPEC meeting. And you can see here, certainly from a price structure point of view, where Brent crude oil has broken through this bull flag over the last week. We also had additional confirmation on the oil inventory data on Wednesday too. So we had a significant drawdown where oil stocks dropped by more than 10 million barrels per day, the biggest drop in inventories in almost 2 years. So with that, that also had an immediate impact on oil prices midweek, with a continuation particularly on WTI crude oil with this breakout to the upside. In terms of the next key levels here for WTI crude oil and Brent crude oil, we'll have a look at the weekly chart. Again, we mentioned this last week where we had a bullish engulfing candle into the close, where if that broke above the weekly highs here, we had certainly the potential to follow through and come back and retest the swing highs here, which is the 3.5-year highs. We've now broken above that level, so we've seen a lot of follow through over the last week for WTI crude oil. In terms of the breakout here in oil over the last week, it's been over 600 points on the table there to take advantage of that big move higher for oil prices. The next level I'm looking at, if we continue to drive higher here for WTI crude oil, is just above $75. So taking the price up to $75.67 per barrel. If we look at Brent crude oil, also a very strong close here on Friday. It's trading just under 80 US dollars per barrel. It seems likely that we will retest that level going into next week. The next major levels I'm looking at would be a retest back towards the swing highs of this year, which reside just above $80.50 per barrel. If you look at that also on a weekly chart, we've essentially just broken above the bull flag here. We've got further confirmation that we could see higher prices going into next week. And of course, we've seen hedge funds and money managers significantly increase their net long positions going into July next week. So with that, that has been the week ahead commodity report. Next week, we have the minutes of the FOMC on Wednesday and non-farm payrolls on Friday. If you'd like to join us at the Gold and Silver Club for our live trading room sessions as we prepare for those events and get access to our custom-built market data and news trading platform, which can really help you get an edge, especially for news trading, all you need to do is go to www.jointhelivetradingroom.com. The link is also below this report in the description. Just click on the link, make an application, and we will get in touch with you ASAP. So again, if you'd like to join us for our live trading room sessions next week, make an application to www.jointhelivetradingroom.com. And of course, make sure you subscribe to our YouTube channel to be kept updated with the latest commodity reports.